Joining us now is Wedbush Senior Vice President Matt Bryson. He's got an outperform rating, $140 price target on the stock. Matt, this guidance whiff, looks like $1 billion on the top line. Am I seeing that right?
No, you're absolutely right. Memory has gotten more difficult, particularly gotten more difficult in the month of November. I don't think street expectations, or at least street numbers, really changed to show how much more difficult things are in the near term. But that's what you heard from Micron. You're seeing your numbers and their numbers. You heard in their prepared remarks.
So why should investors believe that things get that much better in the second half?
Yeah, so I think there's a couple of things. One is memory is always supply driven. So when you see these big swings in cycles, and particularly into down cycles, it's because we have too much supply coming on. What Micron told you is they're cutting back NAND production. In terms of investment, they're cutting back NAND investment. And they're really not investing in anything except for high bandwidth memory, so the memory that supports AI. And that was the one bright spot for them. The second thing I think is a lot of what's going on in the memory industry in terms of softness is tied to inventories. So I think there was a bit of inventory that got built up in the system. I think in calendar Q3, calendar Q4, calendar Q1, that's getting worked down. Once that gets worked down, demand to customers comes back, and I think you end up with a much better setup starting in Q2 and in the back half of next year.
That's exactly where I was going to go with you, Matt, because whether this is a macro reflection of the environment writ large, or whether it's a reflection perhaps of the competitive environment of Micron versus some of the Asian semiconductor makers.
Yeah, so I think it's macro in the sense that this inventory that got built up, it wouldn't have been as much a problem if you were seeing strong consumer demand right now. So if lots of PCs, lots of handsets were getting bought, then you're holding less inventory because you're selling more product. That certainly hasn't helped things. But I think that the OEMs have been working down inventories since the Q2, Q3 timeframe. And so I think that gets worked out. In terms of Asian competition, yes, there is a bit more competition from China, I think, than people expected. But at the same time, those Chinese memory vendors are relatively small. So CXMT is maybe mid-single digits percentage of the market. YMTC is only high single digits. And they really can only sell into China. So at the margin, I think that's having some effect on the market. But I don't think it's a longer-term concern, given those companies can only sell into China and they're less advanced than Micron and its Korean peers.